And welcome. This is Mary Ellen McGonigal with your Friday afternoon MEM Edge show. And as always, this is the show where we bring you where the action is in the broader markets, and also with an eye toward helping you not only next week, but beyond. You want to get a good feel for that bigger picture and see what's taking shape beneath the markets. We are continuing to see rotation. I will share that with you. And as usual, we're going to take a look at some of those headline news. It was pretty dry earlier in the week, but certainly we did get relevant data as the week progressed. I'll share that with you. And then also take a look at these other broader market indices outside of the S&P 500, again, so you can see what is shaping up during this August period. So let's take a look at those headline news from last week. On Wednesday, we did receive core CPI data, and it did creep up a bit. Now, it was not quite enough to have investors get particularly spooked, although we did see a significant increase in interest rates, and I'll share that with you, as well as the impact. Later in the week, on Friday, we did get PPI, Producer Price Index information, and that also showed an increase. The increase there was due primarily to rising prices in the services sector. Think restaurants, hotels, and so on. So that in turn did show higher numbers and higher inflation. So at the end of the day, we are seeing inflation creeping up. And in response, again, we did see those interest rates rise. General malaise in the broader markets, however, had already descended, and we will get into that as we move forward. In turn, we'll take a look at those interest rates. We also did see the Nasdaq break down below key support. Now, next week, we do get information relating to the Federal Reserve's notes from their latest meetings. We're also going to get retail sales data, and this is in the face of a number of major retailers that are going to be reporting their second quarter earnings. We're also going to get housing starts, and of course, the home construction area has been generally very elevated and a relative outperformer. That housing starts data will be closely watched, and industrial production numbers are due next week as well. So let's go ahead and take a look at these broader markets and see where we stand right now. And here we are with a daily price chart of the S&P 500, and a couple of notable areas I want to point out to you, and that is that relative strength index is below that net neutral 50 and seemingly heading sideways, more downward as well. So we are in a period of negative momentum with that RSI. Let's go ahead and take a look at stochastics. This is a faster moving momentum indicator, and we can see that it last week broke below that 50 level, and we remain in a negative territory for the stochastics as well. So what we can take a look at from here are key areas of not only support, but upside resistance should we see a rally evolve. But on the support side, this key 50-day simple moving average, we are just touching on that at this time. That is at the 4438 level, and it is very critical, not just technically, but also as a level that many technicians and investors pay close attention to. So a break below that 50-day on heavy volume would not be good, certainly for the, if you think about investors' confidence, it will be deflated. So also on that upside, again, on rallies, we are going to pay attention to these shorter term 21 and 10-day simple moving averages as upside resistance. When we get this green line down through this purple, that's a death cross, a shorter term moving average closing below a longer term. And we don't see it that often. We can go back to these pullbacks from earlier this year. They did, in fact, precede further downside. So it's another metric to keep in mind and pay close attention to. Let's go ahead from here and take a look at the equal weighted S&P 500. And of course, this is the S&P that does not take into account the heavier weighting mega cap names. And what we can see taking shape here is that it is also having negative by way of this RSI trending lower and the green line down through the purple. I will go ahead and put those stochastics in, but at the end of the day, we are seeing a bit of deterioration in breadth in the markets. That's what this equal weighted index will in fact tell you. We can see the stochastics in negative territory as well. I will share with you there are certain bright spots in the market, but at the end of the day, the weakness is spreading out beyond those mega cap names. From here, we're going to take a look at the Nasdaq, of course, one of the leading indexes year to date. Let's go ahead and take a look because the Nasdaq did close below that 50-day simple moving average, also has negative metrics on the RSI and the stochastics heading downward. We're also seeing pretty heavy volume here in this selling. This is during the summer months when volume tends to dry up. So that would certainly indicate distribution within the Nasdaq, which of course does not bode well for this tech heavy index. Now, I did want to, from here, go ahead and share with you the underlying sectors in the S&P 500. This is the 11 sectors with the 2-month daily price chart view, added that relative strength indicator, and then sorted it in descending order. Up here at the forefront, energy continues to see strength. It was up almost 3.5% relative to the S&P 500, which was down a little bit. But if we take a look at this chart, you can see energy stocks are getting a little bit overbought, that RSI up there above 70, but certainly in a nice confirmed uptrend and certainly looking interesting relative to elsewhere in the markets. Another area that has sprung back to life this week is healthcare, XLV. We can see this nice sharp reversal, all about earnings and other metrics also that I will share with you as we move forward. And then, of course, healthcare is a bit of a defensive area within the broader markets. You will find stocks that are more value driven. They do offer nice yields, but that could be another reason. I'll share with you some other defensive areas that also were positive for the week last week. So here we are with XLV, positive momentum. I'm going to go ahead back and share with you some of these other areas that are up here at the forefront. Financials did deteriorate a bit. They were flat for the week, still holding firm with positive momentum indicators there. We can also take a look at the industrials, up a little more than 0.5%, also retaining their positive bias. Now, in contrast, I'll go ahead and take you down to the technology area, which did turn negative earlier this week with a close below that 50-day simple moving average. Now, it had been experiencing weakness relative to the broader markets prior to that, but again, this break below key support, very significant. We also have the MACD now in negative territory, joining an already negative RSI. So tech looking very heavy. Of course, certainly year to date, one of the biggest winners. So whether it's profit taking or more, we will continue to stay on top of that. Other areas to pay attention or stay on top of here, consumer discretionary, definitely more of a growth area. You can see it's pulling back to this upward trending 50-day simple moving average, this downward trending MACD, simply indicating this back and fill consolidation phase with the RSI waffling in and out of positive territory. Again, there are bright spots here. We talked about housing, travel related stocks are continuing to hold up well, but there are a number of retailers that are not coming out with great numbers. So next week will be very telling for this particular sector. Other areas that were up last week, but their charts are not looking constructive, and that would be real estate, up about 1%. And also utilities had rallied. That group was also up about 1%. neither of them looking particularly constructive. So from here, let's go ahead beyond these sectors and take a look at some of these sub-industry groupings. I use specific ETFs that are really powerful in helping you stay on top of where that relative strength is shaping up. Where are those money flows? And first up, let's take a look. The US dollar was up 1% last week. As we move through here, I'll share with you the impact there. But one of the reasons on that rising dollar, we can see the rise in interest rates. And this is the yield on the 10-year Treasury. And you can see that it is gapping up quite a bit higher. It's now at almost 4.2%. That 4% level yield has been really impactful relative to negatively impacting growth names such as technology. So as we move forward, also in that rising dollar environment, you will see that gold is and had already been trending lower, but it was down about 1.5% last week. Other areas to take a close look at here would be Brent crude oil. We are now above that $86 per barrel level. And of course, this is one of the reasons that these oil stocks are outperforming. But another very sound reason is they're coming out with very strong numbers, and there are select areas in energy. I shared that with you last week. So if you didn't see that, please go ahead and take a look at last Friday's show, and you'll get hints as to where the strength is in energy. So moving along, of course, you also want to be aware of the weakness. And I talked about technology falling further below its key support. And here we are with IGB. This is the software ETF, also showing weakness here, closing below that 50-day with negative momentum. We can also take a look at semiconductor stocks, breaking very decisively below that 50-day, RSI negative territory, MACD also now in negative territory. Pretty high volume here as well as the group continues to come under selling pressure. Again, one of the stronger sub-industry groups year to date. And again, profit taking, but other factors at play here as well. Not every area in the semiconductor space is exhibiting strong growth outlooks in their earnings reports. So from here, I also want to share with you with that banking or the financials that fared well last week. They were flat relative to a negative market. Let's take a look. This is KRE, the regional banking ETF, and it did pull back a bit last week. There was news earlier in the week relative to liquidity problems among several banks that did in turn cause the group to pull back, but still very much positive relative to its momentum indicators here, finding support at that upward trending 21-day simple moving average. So within these industry groupings and these sub-industry grouping using ETFs, you can really get a good sense of where that strength and or weakness is shaping up. One area that is holding up really well has been the Dow Jones Industrial Average, and it was last week up more than 0.5%. And we can see that it has positive RSI, positive MACD, finding support at that upward trending 21-day simple moving average. So from here, I am going to take a moment and share with you a 2-month daily price chart view of the underlying stocks, those 30 names in the Dow Jones Industrial Index, sorting it by RSI and updating it. This is a great way to really get your arms around where that outperformance is within this grouping. And I will tell you, these names, many of them that are up here at the forefront, they do have one thing in common, and several other names up here at the forefront may join that commonality next week. First up is Caterpillar, and they came out with very good numbers earlier this month. Take a look at this gap up, super big volume, nice positive momentum indicators here. The stock has pulled back to its upward trending 10-day simple moving average, very orderly, and you can see it's in a nice confirmed uptrend, of course, a bellwether name in that industrial sector. Next up here is Walmart. This is a stock that hasn't been a real blockbuster, but it is remaining in a general uptrend. They are due to report their numbers, and you can see that the positive momentum with that RSI, the MACD is a little bit more flat. However, given what's taking shape elsewhere in the markets, it's holding up remarkably well. Exxon, they did come out with numbers. Here's a gap up in response into a nice uptrend. And this particular stock does signify what I talked about earlier relative to money flows into the energy group. Another stock that reported earnings back here in late July is IBM. And we can see that the stock was pushed into very nice uptrend here. Now, more recently, it is flattening out, certainly in an overbought position with that RSI up there above that 70 level. And we can see the MACD is in positive territory. Net looking very constructive. Let's go ahead and take a look at some of these other names. Home Depot, they are due to report next week, and you can see this nice uptrend pulled back very orderly, positive RSI, positive MACD. So we'll see how their numbers, what they come out with. Most importantly, with the Home Depot is going to be their outlook for growth going forward. Procter & Gamble up here at the forefront, holding in really well. What I did want to also share with you, we talked about healthcare moving into a nice resumption of its uptrend. Here we are with J&J, and they came out with great numbers back here at the end of July. Continuation rally, but a little sloppy since then. But it has retained its bias with positive RSI and MACD. That's indicative of one of the reasons I talked about healthcare faring well is coming out with these good numbers. Now, of course, you do also want to be aware of where the weakness is. And certainly we can take a look front and center. Apple, here's that gap down in response to earnings. Super high volume distribution, still looking poised for further downside. So one other area that I did want to share with you is just a quick view of taking a look at value versus growth. And I'm using the Vanguard ETFs. This is VTV. This is the value ETF. And we can see that it is pulling back rather orderly. It does still have positive RSI, positive MACD. And very quickly, this I'm going to share with you. Let's see if I can is a view of their widely used growth ETF. Again, Vanguard, this is VUG. And you can see the clear difference with that momentum shift into negative territory, a break below support, and value is certainly winning out. From here, I'm just going to share a couple of names that are in or certainly top holdings in this VTV ETF and share with you what is, in fact, holding this particular index up and allowing it to outperform. And here we are. One of the top holdings is Berkshire Hathaway, another company that came out with earnings actually last Saturday, and it had a nice gap up, a little bit of a pullback, but certainly anticipated given that the original move on Monday put the stock into an overbought position, still remaining quite constructive. One of the next top holdings in that VTV value fund is UnitedHealth, another earnings driver here. Now, it's not in an uptrend per se, but it certainly is really digesting this significant move from July, back in fill formation, look for a potential base breakout at some point there. And then another top holding in that VTV is JPMorgan Chase. And you can see that it is pulling back, but the momentum indicators are remaining in positive territory. It's holding in quite a bit better than the broader markets, certainly the Nasdaq. And here we are with Procter & Gamble, another of the top 5 in that VTV fund that is holding in well. So while we are seeing really deterioration among technology and higher growth areas of the market, we are seeing several areas that are viewed as value that are holding in well and even in a nice uptrend. And moving on to some other names in that value fund, we can take a look at some of these healthcare names that are on the move higher. First up, we'll take a look at J&J, and this is a company that reported their earnings in the end of July and had a huge move. This is very indicative of what we've seen during this earnings season, where names that are down and out relative to their recent price history are seeing the most positive response to numbers, particularly when they're good. So J&J from there did advance quite a bit higher. We did get a little sloppy here with this pullback, but at the end of the day, your momentum remained constructive with that RSI above 50 and that MACD up here in positive territory. From here, we'll take a look at a healthcare name that reported their earnings this week, and it's Eli Lilly. Take a look. The company is having great success with their Ozempic diabetes, but also weight loss product. The demand is outstripping supply and the growth prospects remain quite strong. From here, I'm going to highlight this characteristic or this price movement after the release of their earnings, and we can see that the stock gapped up into a base breakout. Take a look at that heavy volume and in turn push the stock into this subsequent uptrend. We can also see the MACD pivot here with that black line up through the red, indicating a new uptrend. Now, from here, I did want to share with you a couple of things that can be really helpful as far as telling you whether that stock has further upside after that gap up. And I've added a 5-day simple moving average, and that's this blue line. Oftentimes a stock will gap, certainly with this significant of a move, and we'll have a back and fill formation as that 5-day catches up to the price, in turn allowing it to trade higher. Another very helpful metric is to go ahead and take a look at an intraday 1-hour price chart. This is not a chart view that I use often, but certainly I will go to it after we see those big gaps up, because you want to utilize it to give you a sense of whether there is potentially further near-term upside. So here we are, 1 hour with that LLY, and we can see that the stock has remained above this 5 and 13-hour simple moving averages. We can also see that the metrics with that RSI above 50 and in positive territory. Likewise with the MACD. Now, we did see this crossover black line down through the red, but very simply just indicating this sharp uptrend has now turned into a back and fill period of consolidation. So still looking very constructive for further near-term upside with Eli Lilly. Another name that we can look at that also rallied in response to Eli Lilly's positive diabetes drug response is NVO, Novo Nordisk, and they have their own obesity drug. We can see that gap up out of a very lengthy base, pulling back a little bit, not quite as constructive, but we do still have positive momentum on the daily chart. We are seeing lower volume on those pullback days. And then from here, we can take a quick look at that 1-hour price chart, and you will see the pullback that has been taking place here over the last 2 days, but your momentum is still in positive territory. If we can get NVO above these moving averages, have that MACD black line cross up above the red, that would signal near-term potential upside for the stock. But certainly we can applaud the outperformance taking shape in these mega cap pharmaceutical names in the face of weakness in many other areas of the market. And all of this in this mega cap pharma space, seeing the strength, is in fact what is helping to lead this healthcare area into a nice near-term uptrend. That's it for this week, everyone. I hope you have a fantastic weekend. I'll look for you again here next Friday.